Hey everybody, welcome to the morning market briefing Monday, 8/8/2022, August 8th. Hope you're doing well. Hope you had a good weekend. Dow futures up 42 basis points, S&P up 50, NASDAQ up 69 basis points, oil down a little bit, gold up. Kind of a hodgepodge of news today to go through. It is Merger Monday. We love when this stuff happens over the weekend because we know we have something built in to talk about on Monday. So, Ben, talk us through all the activity. We've got a whole bunch going on.
The problem is with that, I also have to talk about a bunch of companies that I really don't know that much about. But I can talk a little bit strategically.
Signify Health.
Signify Health was exploring strategic alternatives. Signify uses analytics and technology to help health plans, employers, physician groups, and health systems within home care. And basically, CVS is looking to buy them. So CVS trying to fight back after Amazon bought One Medical. That was a really interesting move from Amazon, and I'm surprised not more people are talking about it. But CVS, of course, also owns Aetna, the insurance company, and CVS is really trying to be a one-stop shop for healthcare. Problem is, it's just kind of bloated, and the more that they tack on new business lines, and if they buy Signify, I think that would just going to be another business line, the more difficult the challenge it is going to be for management to kind of streamline and sync everything together. And right now, it seems a little bit like CVS is almost becoming an IBM, kind of just having all these different businesses and trying to, synchronize it all into one cohesive offering. So I think CVS is executing its M&A strategy, but I'm not sure how well they're doing in terms of ingraining everything into the one corporate culture and one thematic strategy.
Yeah, it kind of seems like they're trying to just grab things. Mm-hmm. They're doing a good job of that. Is that what they should be doing, and is it working? Remains to be seen.
It's one thing if you're $1 trillion company in Amazon and you can have that money to play with and do these things and buy the top provider and almost have it operate as an autonomous unit and have the Amazon subscriber go through that. But if you're CVS and you're trying to do all this stuff, it seems like a really big corporate headache when their moneymaker really is the prescription pharmacy benefit management piece of their business. So it'll be interesting to see how that goes.
Also, UPS buying, is it Bomi, an Italian company? They really specialize in distributing medical products. Can be lab samples, can be equipment, pharmaceuticals, whatever it may be. This gives UPS 350 temperature controlled vehicles. This is a company that primarily operates in Europe and Latin America. Ben, kind of makes sense, I guess.
Yeah, when I was looking at doing, we were looking at doing a big pitch on UPS, and for a number of reasons, most notably the fact that Amazon might look to spin out its delivery service in a bigger way. We decided to move away, but UPS under new management has really been quite strong. This fits the strategy in terms of that high margin, high value added logistics for medical supplies, because you make a lot more money on one truckload of medical supplies than you do on one truckload of Amazon packages. But it's interesting that they're doing it internationally. Yeah. So that's probably the biggest thing that sticks out to me on this one.
Apollo is buying cargo hauler Atlas. Maybe just a play to get some 747s.
Yeah, I think Apollo is going to the private equity playbook right now. And that's going to probably be, I think you're going to start to see a lot more of these transactions where with valuations lower, people are going to be looking at asset values, spinning out those assets, doing a lease back, and basically having one very levered entity that's based on the asset value and one service oriented entity. I think that's what they're going to do with Atlas. I don't really like the way Apollo does business, because I think it's very kind of financial engineering in nature and less trying to really improve businesses. But it's additive in terms of debt, not so much in terms of economic growth.
Pfizer buying Global Blood Therapeutics, huge premium relative to where the stock was trading last week. Buying it for over $70 a share, was trading at $33 last week. This is a company that just had their first drug approved really a couple months ago. Pfizer obviously just trying to stay agile.
Yeah, I think that Pfizer's made a ton of cash. Tom is really pleased with how much cash they've made on the vaccine. And I think that right now they're looking to use that cash to make sure that they have a residual income stream and not just a one-time big manna from heaven, which is what the vaccine has turned out to be for Pfizer.
Lastly, Whirlpool is buying my favorite InSinkErator from Emerson for $3 billion. Just kind of one company taking a piece of another, really.
Yeah, I think it fits with the reshuffling we've seen in the industrial space. I think Tom wanted to talk a little bit about this one because for a number of reasons, he says that, people just don't care about this stuff.
Yeah, I love Emerson Electric because they sell everything that you never think of or don't even know that you own. And the InSinkErator is a classic one. A lot of people, anyone who owns a house, there's a high probability you've got one and it just came with the house and you never think about it, but it eats your old food. And so now Whirlpool is going to take over that. But they make Closet Made, they make screwdrivers, they make all the fixtures that go on your pipes. I mean, Emerson Electric kind of makes everything and makes nothing at the same time. It's nothing you ever see or think about. But when I saw this headline, I was very excited to see it in the show notes because InSinkErator is one of those great, what does Emerson Electric do? Well, they sell you your garbage disposal, something you never ever think about, but you definitely got one.
Christmas Eve 2020, I replaced my InSinkErator with a new InSinkErator. No big deal. A lot of people say I'm a real handyman. Only took 18 hours. So InSinkErator, you're right. I mean, I wouldn't have known I had one until I had to replace one.
Yeah. I'd imagine very few people know the brand name of their garbage disposal, but that's the big one.
China, Taiwan. China is continuing the military exercises, formally extending these. Taiwan says that's bad. It's just weird. The whole posturing thing of it, Cold War-esque, except a Cold War where they're right in your backyard.
I'm surprised. Yeah, I mean, I was reading things about this, that this was expected that they would extend. Basically, it's tantamount to a blockade of Taiwan right now. Yeah. And we don't know exactly how long this is going to last. If you think back to January or February, remember the exercises, the military exercises that Russia was doing? This was, and then they were extended, and they were extended, and then Russia
then they extended the invasion.
So I'm watching this very closely because it seems like it's following a different playbook. I don't think anyone expects an invasion, and I don't expect an invasion. I expect much more of a Taiwan is ours, and that's just the way it is. We don't even have to invade.
Yeah, you don't invade something that's 30 years,
right?
And destroy the economic value of it, which is what the reason they enjoy it, having it so much is. If you blow it up, not so valuable anymore.
Right.
Yeah, not so much. Inflation Reduction Act did get through the Senate. Kamala Harris casting the tie-breaking vote. Now heading to the House, it'll raise $739 billion and spend $433 billion over 10 years. Not a whole lot of surprises here. I mean, we've seen, I think we all expected ACA to be extended. This gets another 3 years there. There's $20 billion going to green banks, basically these nonprofits that provide cheap financing to energy efficient companies and products. $639 billion on climate and energy programs, specifically tax credits for buying electric and hydrogen powered vehicles. They're going to raise the corporate minimum tax to 15%. They did preserve the tax benefits of accelerated depreciation, which I would have thought could have been a sticking point at some point. And then they moved through a 1% excise tax on stock buybacks. Probably going to get through the House, I'd imagine, right?
I guess so. Yeah, I think that this will probably go through. The biggest thing for me, I think, is going to be the stock buybacks and the tax credits for electric vehicles. I think that could move the needle for some people, especially on the electric vehicle side, maybe at the lower middle income levels. Having said that, you're still going to have to pay for the electricity and things like that. So I don't know. I'm kind of on the fence on that. I know that a lot of electric vehicle makers are up this morning on the heels of this. And then the stock buyback thing is going to be interesting. How do people react? I think for some companies, like you look at Apple, I don't think that they're really going to be dissuaded by a 1% tax on stock buybacks, but other companies, especially like banks, JP Morgan, et cetera, I think they're going to be hypersensitive to the 1% tax. And you could see that the stock buybacks start to decline.
Yeah, it's going to be interesting. I think banks, especially, what do they do with extra cash? Because, I mean, really for the last 14 years when money was cheap, it was a pretty common practice to be reducing share count kind of across the board. But what now? You know, you think of banks, and if you're Apple and you're sitting on extra cash, maybe you think more about, you probably don't care about the 1%, but if you did, maybe you think more about innovation, you think more about acquisitions. But on the banking and the more service side of the economy, I don't know what the move is.
And I think you could argue that spending it on CapEx is going to be a bad investment, especially with inflation. Everything's more expensive for you to build a new factory at 110% of what it cost to do it last year, you know, and suck up demand and suck up supplies that are already constrained. You know, it's just going to be.
From a classic economic standpoint, it certainly seems to be a negative on growth, because you're not providing an incentive for anything. You're not providing an incentive for CapEx. You're providing a disincentive for stock buybacks. So it seems like it's counter. But I mean, if you want to induce a recession, and therefore, in order to induce lower inflation, I guess this might be one way to do it.
Yeah. Federal Reserve leaning more and more towards 75 bip hike in September. I would expect that fully. Tom, what have you seen commentary wise? Anything standing out?
Yeah, so the Fed's Michelle Bowman had an article in the Wall Street Journal saying that interest rates are going to continue going up. You know, to quote what exactly she said was that the inflation figure is concerningly high, and noted there are few, if any, concrete indications that inflation has peaked. And so, you know, we've talked a lot about it last week. We saw a big sell-off on bonds on Friday. There's really no indication to me, or it seems the Fed, and they've been very vocal about this over the last 2 weeks, that there's any reason to slow or pivot or change. And she also noted that there are going to be similarly sized increases should be on the table until we see inflation declining in a consistent, meaningful, and lasting way, which means that if you look at futures now, it says we'll probably get a 75 basis point hike on the next meeting. But after that, it starts looking like ones and twos, you know, kind of depending on which month you're looking at, and then an ultimate cut in May now of next year. So, you know, somebody has to basically be called on this bluff. Either the Fed is going to actually pivot and start cutting in next May, or they're going to continue to raise by 75 basis points in perpetuity until we see inflation fall, which is counter to what futures are indicating right now. The futures right now are saying we're probably going to hit a hard recession before that and have to cut rates before we get to the point where we raise 75 basis points another 5 times. So that's really the battleground right now for rates. But you know, if I had to be in one camp, I would say that we're going to continue to see rate hikes until we hit a recession. You know, when that is going to be pretty tough, or at least a deeper portion of the recession or continued slowdown. So I would say that, you know, the real opportunity is kind of in that intermediate range where you're not immediately getting popped by rate hikes, but you are getting excess, you know, return for your money. I mean, we're so inverted on the yield curve. We're at negative 44 bips on the 210s, which is as deep as it's been really since the 80s. You know, so there's a lot of value in short bonds, but you're probably going to get popped a little bit if you're too short. And you don't want to go too long because you're not really getting any excess yield. So that kind of 3 to 7 year range, I think, is where the value is right now, where you sort of avoid getting popped by the Fed, but you get a little bit more value for your time.
We do have CPI coming out on Wednesday. Ben, what are you expecting?
I'm actually encouraged. You do have a higher expectation on the core. You do have a lower expectation on the headline, but that's because, you know, food and energy prices have come off just a little bit here in July, and then even into August. But on the core, that's what the Fed's going to be watching, and we're expected to go up from 5.9 to 6.1%. I like that the expectation is higher. And I think that even if we're at 6, the way the Fed thinks, they're so rooted to expectations. If we're at 6, even though it's higher than 5.9, there'll be more of a chorus saying inflation has peaked. Having said that, based on what I see from companies reporting earnings, from just the underlying dynamics of the economy, and frankly, the pickup that we saw toward the end of July and into August in the actual economy, I'm concerned that there will be more staying power on this inflation side. And I think that, you know, you still have that. Yeah, I think that 2% anchoring of inflation, we talked about it at the PM meeting on Friday. You cannot give a cost of living increase in wages that's 2% nowadays,
right?
Because people do not accept that. We have become unanchored from 2%, whether the Fed wants to admit that or not. And I think that to re-anchor to 2% is going to take some pain.
Yeah, I agree. We'll definitely have lots of commentary on the CPI. That's certainly the big news. We do still have earnings trickling in, all kinds of stuff this week. So tune in every morning at 8:30, and we will talk to you tomorrow.